Joining us on the show this morning. Pramod, good to have you with us. I'm going to dive into some stocks here because it's an interesting morning. We've got names like a Spark that's up about 8%, and Info Edge up 6-7% right now. And across the board, we're seeing a smattering of names in the broader market that are catching our eye. So clearly, momentum is very much intact. Off the bat, then, what are some of the names that perhaps you're closely monitoring, given the kind of mood the market seems to be in?
Well, we've been looking at pretty much the market leaders in in sectors where we believe that demand is quite structural, given that we're still a populous country and the demographic dividends largely playing to the consumer sectors. So within that, our focus has always been focus on companies with strong balance sheets, strong barriers to entry, competitive advantages, which can ensure that growth opportunity flows through to the bottom line with very little competitive disadvantages. So, companies like in the financial sector, we've owned HDFC Bank, Kotak Bank, and Bajaj Finance. In building materials, we've owned Asian Paints and Berger Paints and Pidilite. And similarly in pharma, we've owned Abbott and Divi's and Dr. Lal Path Labs. So all have been leaders in the respective sectors, and that's something that's pretty much critical to our investment philosophy.
Pramod, hi there. Good morning. I wanted to get in your take on what the outlook is when it comes to autos, because although you do have Maruti Suzuki that has managed to aid over 100,000 in car sales, they have very categorically said that as of now, things are nowhere close to being normal. You have seen on a month-on-month basis as well, there has been a spike in numbers. Tractors, or the rural segment in particular, has done well. Could that be the saving grace when it comes to the auto space as a whole?
Yeah, I think from a longer-term perspective, the penetration levels are still fairly low. So the longer-term growth trajectory is intact. From a near-term perspective, I think you're absolutely right. Rural is perhaps where we will see a pickup in demand. Clearly, having the second consecutive good monsoon, there have been a plethora of reforms announced by the government as far as the agricultural economy is concerned. Hopefully that should pay through. And also, there's been a significant amount of stimulus that's been provided by the government, particularly in the rural population. Adding all of these up, I think you might see the first signs of recovery coming from the rural areas. But again, I would tend to agree that these are perhaps early days just yet. There's an element of pent-up demand which has helped shown decent numbers in the recent past. For a more steady state, a sustainable recovery, we'll have to wait and see how soon we can get around the whole COVID situation, whether it's good news around the vaccine or the cure, or simply, I think what we're seeing now is we seem to be achieving some sort of flattening of the curve where we can expect some sort of return to normalcy as far as economic activity is concerned. And if that happens, we believe that over the next 3 to 5 years, we are in for a decent pickup in the automobile cycle.
Okay. Where is it that you stand when it comes to the FMCG sector? While the street seems to be a tad divided as to whether or not we will see a recovery kick in, are you betting on names even within the mid-cap sphere when it comes to consumption, or are you still on the fence?
Well, we have one FMCG name in the portfolio, that's Nestle, and we've been quite positive on it for a long time. And again, more than just the growth prospects, we look for competitive advantages. And Nestle, particularly in product categories like baby foods, has demonstrated that it's head and shoulders above competition. There's very little competition in sight, and therefore the economics of dominating a sector which has structural growth prospects becomes very, very attractive from our standpoint. So while we are bullish on the consumption story in India, we also would like to play companies which can defend themselves against competition, because the flip side of the story that growth is intact and growth is structural is there'll always be new competitive entry, right? Because India is still one of the few beacons of growth across the world, and therefore both global players and new local players will come up in every product category which has long-term growth prospects. So it boils down to whether the company in question be able to defend itself against such competitive threats. And that way we continue to remain confident about Nestlé's prospects.
Market leaders across sectors, does that apply to banks as well, Pramod, or are you looking even at some of the second-rung names?
Well, even in banks and NBFCs as well, and in fact, across the board in terms of financial services, we just launched our financial services specific fund last week, demonstrated our confidence in this whole sector. And this is not to say that we're pretty much past the NPA cycle or anything. I think the lockdown will have its own ramifications in terms of NPAs for the banking sector and NBFC sector. The way we are looking at it is two-pronged for this sector. First is the structural story where Indians are finally moving their household savings from physical assets to financial savings. Historically, we've had a love affair with real estate and gold. That seems to be waning, although gold seems to be coming back, perhaps cyclically so. But in the long run, financial savings will underpin the long-term growth trajectory for financial services in general. But particularly when it comes to banks and NBFCs, these are heavily geared to the economic cycle. And if we believe that the next 3 to 5 years augurs well for the economic cycle, a period like this, which involves an element of crisis, which means that at the end of the crisis, there will be a few banks and NBFCs left, which have managed to weather the storm in terms of either because they've had a strong balance sheet and also a strong competitive advantage. And that means that the ones that manage to survive doubly benefit, because you do see a pickup in credit demand at the end of the crisis. At the same time, you see very little competition because the rest of the competition is sort of recapitalizing their balance sheets. So if you can pick and choose the top banks and NBFCs, which have very strong balance sheets and are able to survive this crisis, I think it presents a really attractive opportunity for somebody looking to invest over the next 3 to 5 years.
Okay, that's on the banks. What about pharma names as well? Let's talk about the opportunity there, also given the kind of run-up that we've already seen across the pharma pack.
Yeah, I mean, pharma is a structural story again. Given healthcare in India, it will be a focus. It's 1.4 billion people. Healthcare is almost like an essential product or service. So it's a structural growth opportunity. But I don't think anything has changed because of COVID. If at all, hygiene levels of people because of the awareness of getting infected is improved, and therefore the typical rate of infections would come down. How much of that is structural, we'll have to wait and see. But from a growth opportunity perspective, it's always presented a long growth runway. Within that, the real focus again has to be the ones that can protect their competitive position by building moats and competitive advantages around them. And like I said, because India is still very underpenetrated in terms of healthcare, the world's largest pharma companies will be out there to compete in this marketplace. But even otherwise, the pharma sector, which in India is largely outward facing, you'll have to play it case by case. I don't think it's you can paint all pharma companies with the same brush, because the external dynamics have changed. Whether it's the regulatory enforcement or the distribution of pharmaceuticals in the world's largest market, that's the US, being consolidated, and that having its own pressure on margins and returns on capital, means that not all of them will succeed equally. So there will be a few winners, and if you can position them yourself amongst those, I think pharma also presents a decent set of opportunities.